What is the difference? The main difference tends to be frontier countries are low-income countries with developing institutions and economies. Now, there are some other definitions. For example, JP Morgan has a NextGem universe, which has a number of frontier countries in that universe. But how we think about frontier, we think the universe is around 50 countries that we believe are true frontier countries. So that's kind of how we look at the difference between a mainstream emerging market and a frontier market country. Frontier market bonds performed very strongly in 2025. We had returns of over 22%. It outperformed mainstream emerging markets. When I say mainstream, I'm talking about hard currency and local currency markets in emerging markets. So overall, it was a very strong year of performance for frontier markets. The outlook in the current environment is still one of uncertainty because we don't know the extent of the war, of the fallout from the war, where oil prices are going to be averaging over the course of the year, what this means for inflation in these countries. But if you look at the current month so far, frontier markets have outperformed mainstream EM, hard currency, and local currency. So just shows you the benefit of being invested in an asset class which has much lower correlations to other emerging markets and risk assets. Yeah, our advice to clients when it comes to investing in frontier markets is that you're investing in an asset class which is specialized. We call it a niche asset class. There's not very many funds with a dedicated approach that we have. So you're investing in an asset class which is not as crowded as other parts of emerging markets. It's the area that you can generate the highest yields and highest returns. So we would always advise clients to have a portion of their emerging market assets invested in a dedicated frontier bond fund. So, over the last decade, we've seen periods of dollar strength, yet the returns from frontier local currency bonds have been positive. Now, that contrasts with mainstream EM local currency bonds, which have performed very poorly during periods of a strong dollar. So if I look at year to date this year, we've seen positive returns from frontier local markets, whereas mainstream EM local markets have had negative returns. So it just shows you that the local markets and frontier offer something, well, a combination actually of higher yields and much lower correlations. So this is why we think frontier local is an interesting asset class to be investing in. So we have exposure in the strategy to 40 countries. Our largest exposure right now would be Nigeria. We have 8% in Nigeria. Egypt, we have reduced our exposure to Egypt this month given our concerns of the impact from higher oil and gas prices. So Egypt is about 6%. We have increased exposure to oil exporters in this environment, so we've taken Angola up to 5.5%. We've also initiated a position in Gabon on back of the news that they're going to be getting an IMF program. So in this current environment, we feel comfortable adding exposure to the oil exporters, and that's where we've been positioning our fund in. Elsewhere, we've reduced some of our exposure to local markets, countries like Sri Lanka and Dominican Republic, which will be hit potentially hard by the higher oil prices. So there's been some portfolio shifting, but I think we are comfortable investing more in the oil exporting countries. I mean, the philosophy of the Frontier Fund is that you're getting exposure to smaller issuers in areas or regions which might be very little information available to investors, or is highly specialized. You need to find a fund manager like Aberdeen that has the expertise in these areas. So the idea is to generate high returns, high yields in these markets, which again you can only find in a dedicated frontier bond fund. And then also, we have a long-term track record as well, which I think will offer appeal to investors who are looking at this asset class as a way to diversify their exposure in emerging markets.